TradeTheMBA.com. This is John's report is for the 16th of November. And well, market's having a little trouble here breaking that 4,008 previous resistance from an algo level that we had. And we're getting that pivot of magenta. It's still above white, just barely 34 to 35. It's early, so we'll see how that plays out. But I also watched that steel dipping below cyan, and cyan now moving over. So that's a DOC spread potentially beginning from a daily standpoint. So we'll see how the day plays out, but that will be interesting. We'll obviously going to see that on the 50K and 5K well before anything significant happens. NQ still stronger and above its 50% clear divergence between the two. Flipping to oil, still maintaining in that middle 80 range. It's, I don't think, great economically, but the longer it persists, the more people are able to absorb it, and um, we'll see if it's able to be sustainable from a broader economic standpoint. And here we have the euro continuing its rise. Of course, we had the little rocket scare, which, to me, ironically, is more of a buy setup than not, because if you're going to have a war, then it's going to end quickly. So you might as well buy any dip because um, it's going to get bought up because the world's not over. Counterintuitive logic, but nonetheless true. And the euro continuing its rise is simply because the expectation that the U.S. Doesn't have any more inflation, and um, everyone's no longer in need. But I think the reality of it is it's more the Fed uh, backstopping uh, cash for the eurozone, and that to buy the oil, and that reduces the demand of dollars. Back channel wise. From a TLT standpoint, you can see the bond market reacting to it, suggesting that rates would continue to soften. So um, that placed the idea that the Fed will stop or at least slow down the progression of how aggressive it's been. From a gold standpoint, you would think that with the potential of Armageddon and stuff like that, that it would skyrocket, but pretty consistent within that, and we can see that bullish wise still there. No real short activity going into it at all. And we talked about the accumulation when it was at its lows, that central markets and that were buying lots of physical gold, and there's been that disparity between the actual acquisition versus the paper trade. Bitcoin, just holding on, I think, until a lot of this FTX stuff gets worked out, and whether there's some kind of stabilization from what's going on in the crypto world. Uh, Probably not a whole lot of enthusiasm. And it's interesting that you're literally right back to the levels where it originally broke out, which we had from, if I scroll all the way back on this daily, we could do that. You'd be able to see that all of this goes way back to that initial breakout and the positive extremes that were established way back here. You can see them right there, dipping all the way down. So, actually, I think even if you go a little further, there's more of them going all the way back to right about here. And that's just at that 16 range, slightly under. So, it took some years, but from a daily standpoint, it filled back um, all those positive extremes, which is wild, but nonetheless happens in time. From an ETH standpoint, also not doing much of anything. When we look at our 50K, we had a little up and down, but mostly we've been held under that 50% mark here, even on that turnaround move. And looking at softness from a 50K standpoint, I mean, we're barely at 25. So slightly below that, I think really encourages that move to the 0% that we got with this spike of the MBI white over. So we'll definitely want to be keeping an eye on that. Intraday was pretty spectacular. We started off with this massive breakup that just skyrocketed and really propelled things moving forward as we got really soft data. The beautiful cyan under red buy setup. It started to convert right here. You're still at the peaks. That's from a MBI standpoint, fine. You can play it because you have the steel below negative 13.5 coming back up above it, though. You definitely would want to see some breakdown in it because once it gets back above that 13.5 with the steel, that's going to give it some strength. And in this particular case, it continued its soft pattern, and then the secondary DOC spread had that red MBI leading, and that's when it broke down just a little bit. I mean, these are just filling of positive extremes. There were a lot of them that had to be filled back going all the way, well, from the 4,000, but even below where I had marked the original at the 39 range. And then it was just a matter of waiting. And then the whole missile attack setup really just gave the impetus to fill those positive extremes, and there was a little bit of carry through from a fear factor, but I think that became a buy opportunity at that spot. And even though it was jagged going up, there was a lot of little back and forth play, but in the end, it held up pretty well going through, and here we are into the post market. Just a lot of fluctuation. No real positive extremes on this increase, but again, we're just right back at that exact same breakout algo. So in essence, nothing happened. It started up before, went slightly below it, and at the end evened out right at the exact same level. So welcome to a mean reversion market, which I think is healthy. That's exactly what we want to be seeing. It's more normalized than we've had in many years. As always, though, continue to look for me on the Skype chat. Trade well. We'll talk again later.